buy a house until you watch this video. There's a lot of surprising facts that I'm going to uncover throughout this video. Should you rent versus buy, you will have a clear framework to help you think through this question by the end of this video. Some of people are saying renting is throwing money away, you should buy as early as you can. However, very little people actually thought through what's the total cost of ownership in terms of owning a home, and also what's the opportunity cost of owning a home. In many situations, rent is a much smarter financial decision. I've built my net worth from 0 to 7 figures in the past few years. One of the major factors I would say contributed to my wealth building is choosing to rent instead of buying. So let me walk you through my thinking process and debunk some of the myths for rent versus buy. When you purchase a home, it's not only an asset, it's also a liability. I would argue that if you put 20% down and carry 80% of mortgage, it's mostly a liability. So now let's take a look at why this matters. First, the ownership of the house is actually the bank until you pay it off. It might make people feel better to think they're owning their house, but in fact, in any situation when default happens, the bank ultimately has a right to take the house back. There's no difference when someone cannot afford their rent and get kicked out by their landlord. Homeowners might not think they actually have a landlord, but it's actually the bank. We saw that happen during financial crisis. A lot of people lost their home for this reason. Also, if the house price is dropping sharply, like what happened in financial crisis, some people can end up owing more money to the bank than how much the house is worth at the market value. This was shocking to some of the people. When they lost their home, they can't even get their down payment back because of this reason. Owning a home is more costly than you think. There are a lot of hidden costs of owning a home. I will use an example to walk you through the math of buying versus renting. So now let's use a $1 million purchase price home as an example, which is pretty normal in the Bay Area. It's actually on the lower end of the cost. So please note that this can vary a lot depending on your locations and the specific properties and market conditions and etc. So I will break down the cost basing on this $1 million home that's located in California. So let's take a look at the recurring cost. Property tax, which typically ranging from 0.32% to over 2% of the home value annually. Homeowner insurance, which typically range from 0.35% to 1%. The cost fluctuates based on the risk factors in your area. HOA fees, which might vary, can go to 0 to upward of $12,000 per year, depending on the development of the property. Maintenance and repairs, 1 to 4%. This is the common rule of thumb for the home value annually dedicated to maintenance cost, which can range from $10,000 to $40,000 per year, which can fluctuate depending on the house's age and condition. So let's do the math here. The total recurring cost can be ranging from $21,000 to $57,000 a year. And on top of that, there's also one-time and upfront cost. The first thing will be the closing cost when you're purchasing the home. So this can be anywhere between 2 to 5%, so anywhere ranging from $20,000 to $50,000 for a $1 million sales price home. It can be different depending on different factors, for example, the agent you're working with and etc. Landscaping, it can range from a few $100s to DIY maintenance or a couple $1,000s if you want to totally revamp your entire yard. Home renovations and upgrades, these obviously depending on how much you want to get into the renovation and what kind of scope you're looking at, it can fluctuate quite a bit. So this total one-time cost can range anywhere between $20,000 to over $50,000. So now we understood the recurring cost and the one-time cost of owning a house. Something that people often miss looking is opportunity cost. When you put a large chunk of mortgage towards a property, the opportunity cost is a cost if you were putting some money towards investing. To fully illustrate this point, I want you to think about renting versus buying at the time frame that you will be paying off your mortgage. For example, 30 years. Just like how investment compounds, the opportunity cost also compounds over the years. So it will be a little bit mathematical from here, but this math is very critical and very few people understood. And it's very eye-opening to see. So I will encourage you to follow through. Now let's take a look at this chart for a second. By year 30, the actual price you paid for the house Instead of the $1 million purchase price, it's actually going to be $2 million because you paid over $1 million worth of interest. So if we know ultimately we're paying $2 million instead of $1 million of the property, let's not forget about the recurring and one-time cost we just spoke about. If I use the lower end of the annual recurring cost, which was $21,000 a year times 30 years, and then plus a $20,000 one-time cost, and this comes up to $650,000. So this is your total cost of ownership across 30 years is $2.65 million. Then the question is how much the house is going to be worth in 30 years. So here we're using a 3.5 historical growth rate. If you use this compounding growth rate, in 30 years, the house worth $1 million today will be worth $2.8 million. So we're using this $2.8 million as a future projected value minus the $2.65 million total cost of ownership. You will be ended up of a net $150,000 in profit in terms of its final asset value. So what if I put the down payment and extra income cash flow towards stock market and let it grow for 30 years? So there are two things needs to be considered. What's the total cost of rent over the next 30 years I'll be paying? And also, what's the total asset growth over the next 30 years when I put the money towards stock market? So let's still use a $1 million house example. The rent typically in my region will be around $3,500. So let's assume 3% year-over-year rent growth. In the 30 years time frame, the rent will cost you $1.7 million. And now let's take a look at the total asset growth. There are two elements of this. One is that there is a $200,000 down payment, which you will put towards mortgage. And second is the extra cash flow you will be putting towards investing instead of putting it towards your mortgage. Because with the $1 million house, your monthly payment will be $6,100 versus a $3,500 rent. Keep in mind that the rent will grow over time, but your monthly mortgage doesn't. But you will have to pay other things like maintenance costs and etc. So from this chart, as you can see, buying will actually become cheaper after 21 years. So for me to simplify this math, I'll be using a monthly $1,000 extra cash flow for investment. And obviously, you will have a lot more upfront cash, which is great. And you can compound that growth. And cash flow initially will be look like $2,600. But as the years go on, and you will have negative cash flow when compared to buying. So extra $1,000 cash flow is somewhere in the middle, and I believe that's what's fair for this case assumption. So let's do the math here. We have $200,000 down payment and $1,000 monthly contribution, and a assumed 7% compounding growth, which are in line with the S&P 500 in 30 years, and this amount will grow to $2.65 million. So if we use this final asset value minus the rent you'll be paying out, which is $1.7 million, and you will be ended up with a $950,000 profit. So now let's put the numbers side by side together. The final asset value for buying will be $2.8 million final house value minus the $2.65 million cost that's coming from the purchase price, interest, and all the recurring cost. That equals to $150,000. And versus on the renting side, and you will have your initial down payment and the initial cash flow to grow up to a $2.65 million equity, and then minus your $1.7 million you will put towards your rent. That will equals to $950,000 in terms of total net asset. This is very shocking, at least to me, when I first look at these numbers, and to be honest, 7% I think is very conservative number I'm making here. If you are an intelligent investor, you could potentially outperform the 7% market growth rate. And you might also argue that housing price might grow higher than 3.5% year over year, which is true. It really depends on the region, but for simplicity purpose, and we're using the average rate for this comparison purpose. So far we have gone through the numbers, and now let's talk about some of the soft factors when it comes to buying versus renting, the pros and cons of buying versus renting. So first thing, upfront cost. Buying typically requires a higher upfront cost from mortgage, while renting requires very minimal upfront cost. You just need the security deposit and the first amount of rent. Number two, flexibility. It's less flexible for buying a home because buy and sell home is very costly and also very time consuming. For renting, you can move in and out very easily at the end of your lease without any hassle in terms of selling. And also, you will have more equity flexibility when you're renting because all your assets are accessible through your investment accounts. And however, your house isn't liquidable until you have to sell it. Number three, maintenance. Higher maintenance costs for homeowners and for renters. Your landlord basically repairs and maintains everything. Number four, lifestyle and family needs. A lot of home buyers make their purchase decision based on their lifestyle and their family's wants and needs. If someone has a big family, and it might make sense for them to buy versus rent so their family can live in a comfortable place. For smaller family or individual, this might be less important. So ultimately, choosing rent versus buy is a personal and family decision depending on their needs and priorities. But before you buy, which can be one of the largest purchases in your entire life, please make sure to run your numbers and understand what you're signing up for and what's the pros and cons of your home purchase decision. I hope you found this video helpful. Over the past few years, I found these 11 books really transformed my personal finance life and how I think through things and how I approach investing. I'll link a card here and make sure you check it out before you go and subscribe and like this video. Thank you so much for watching and I'll see you next time. Bye.